Good evening, everybody, and welcome to another live stream by the Option School. This is your friend Pradeep Singla. Few margin tricks in option trading strategies. Although we would have loved to do more research on this, but anyway, still we are going to show you certain things that which can reduce the margin requirements like anything. Right? Many of you have been uh, requesting us to do this kind of a video. We said, okay, let us do this, and maybe this will help you to reduce margins in any of your trades. We have taken examples from Nifty, but a similar pattern works in all the other stock options also. So it's applicable to Nifty options, Bank Nifty options, or even to any other stock options, maybe Reliance, HDFC, whatever. Right? So hopefully my voice is audible. If you can confirm that my voice is audible. And sorry for a 15 minutes delay. We were just calculating margins for some of the positions. Right. So crystal clear, Mr. Nipam. Thanks, Mr. Narendra, for joining our membership. I'm seeing a huge, long chat. Uh, Hopefully the chat is healthy and there are no problems. Right? Okay, thanks for confirming. Let us start. All of you who are watching this channel for the first time, most welcome to you, and do not forget to click on that subscribe button. And when you're clicking on that subscribe button, you also need to click on that bell icon so that whenever we are uploading a video or whenever we are live, you will get an instant notification. Most of the days, on all working days, we are live at 9 p.m. Today we are slightly late by 10 to 15 minutes. And all my other friends, all who are already part of the family, you know what to do. You need to click that like button already. Deepak ji and Mr. Ghosh, Mr. JP, all of you are already making appeals. Please go ahead and click on that like button. So yes, we have decent likes and we have very good 3 dislikes also. So there are people who are coming every day just before the start of the video pressing a dislike. Okay, but before the start of the video, the number of likes are excellent, much better than whatever we have on the other side. So thanks to all of you. We need at least 100 likes to start the video, but anyway, whatever we are having is not bad. Mr. Narendra says, I am new to trading. Most welcome, Mr. Narendra, and hopefully this will help you. The channel will help you in understanding some intricacies of trading. Right? Let us start now. Uh, Although it's not a very difficult thing, I think we have given a similar kind of information to all of you earlier also. Now there are a lot of things which are in mind that okay, what will happen if I just sell a call? What will happen if I sell a call and put? What kind of margins are blocked and what kind of margins are blocked at different levels of call and put, right? So let us first see, and let me tell you, I'm taking all these examples from Nifty only, right? Because it takes a lot of a time to all do this different calculations at different strike prices. So first thing is, suppose market is somewhere around whatever 11,070 or 11,100. So if we said okay, let us say if I want to sell 11,300 call, the margin required is 1,13,371. Right, this is the margin required. Suppose I want to sell 11,200 call, the margin required is slightly higher. Instead of 1,13,000, it is 1,16,000. And if you want to sell 11,100 call, which is almost at the money, so as you come closer to the spot, the margin requirement keeps on slightly increasing. So if you want to sell 11,100 call, the margin requirement is 1,19,680 rupees. So this is very basic, right? All of us know that okay, roughly around this kind of a margin is required whenever you want to sell these positions. Obviously, when you want to buy, only thing you need to pay is the price of that option. That is generally, if it is out of the money, it's the premium of the option. So for buying, no extra margin required. For selling, you definitely need to give this kind of margin. All these positions are month hand positions. Now there is a very interesting pattern which we have seen, that okay, how can you reduce your margin requirements when you are trading in these positions? So let us see if another thing now. If I am adding a 10,800 put also. So I'm selling 11,300 call and I'm adding 10,800 put also. So instead of selling a naked call, what I'm doing is I'm doing a short strangle wherein I am getting some extra premium from 10,800 put also. So the margin required is hardly 1,18,000. See, for margin required for selling a call of 1 lakh was 1,13,000. It just added 5,000 rupees and you are able to sell 10,800 put also. The benefit here is that okay, you are receiving huge amount of premium by selling 10,800 put also, right? So your ROI can improve drastically. Let's say 11,300 call is around what, maybe 200 rupees. So if you are able to sell something worth 200 rupees in 1,13,000 rupees and you add another 150 160 rupees by selling 10,800 put, so overall on 1,18,000 rupees you're collecting a premium of more than 350 360 rupees, which means that overall your ROI has improved drastically. Almost it will become double, right? Similarly, if you do 11,200 call with 10,800 put, here if you see it is 1,21,000 rupees. Now this is very interesting to see that okay, in this case the margin required is slightly higher compared to the earlier position. Can anybody tell me why? In this case the upper case is 11,300 versus 10,800. The margin required is 1,18,000. Now, what I have done is instead of selling 11,300, I have sold 11,200 call. So when I'm selling 11,200 call with same put of 10,800, why the margin required should increase? It has become now 1,21,000 rupees compared to 1,18,000 rupees. Hmm? Any ideas? Arun says it's close to strike price. Okay, as we have seen, the margin required for 11,200 is slightly higher compared to 11,300. And secondly, all these margin requirements now are analyzing that okay, what is the risk to the position? When you are selling 11,300 with 10,800, obviously the risk is slightly less compared to when you are selling 11,200 and 10,000. Right. Similarly, let us see if we sell 11,100 and 10,008. I've just maintained that same put, which is saying 10,008, 10,008, 10,008 with 11,300, 10,008 with 11,200, and 10,008 with 11,100. Now, if you see 10,008 with 11,100, you are collecting more premium, but then the risk is also increasing because the gap between the two positions is getting reduced. So slightly higher margin, 1,24,000. The 610 compared to 11 to 10.8, it was 1 to 1, right? So as you are reducing the margin, now generally what happens is in this kind of scenario, the loss of call will be taken care by what? The loss of call will be taken care by what? Hope all of you understand this short strangle, the loss of call will be taken care by profit input. Similarly, the loss input is taken care by profit in call. So when I am saying 11,300, 10,800, 10,800 put can take care of loss of 11,300. But when I say 11,100 and 10,800, obviously the amount of loss which 11,100 can have, it can be slightly higher, and 10,800 put may not be able to fulfill that. A slightly higher margin is required. See, if I am showing 11,100 call with 10,500 put, if I'm making my put very far away, so chances of market touching 10,500 can be low, but still the margin required is high because 10,500 put will not be able to cover the loss of 11,100 call that efficiently what 10,800 put can do. Are you getting my point? So 10,800 can handle the loss better. So you're creating more premium in that. So margin requirement is slightly lower. But in this case, because the put premium will be very low, it will not be able to cover much of the loss in the call side. So margin requirement is slightly higher. And in case now 10,008, we have seen 10,008 11,100, 10,005 11,100, and see this. 11,1, 11,1. Now 11,100 put is also very, very strong, right? To take care of loss of 11,100 call. 11,100 call is very strong to take care of loss of 11,100 put. So the margin required is 1 lakh 16,000. Right? Hopefully all these calculations are uh, accurate as far as possible. I think they are accurate, right? So what we are seeing is if my put and call are strong, only then it reduces my margin. If it happens that okay, my position becomes slightly skewed towards one side, my margin requirement also start increasing. Imagine a situation that you have started with something like 11,300 and 10,500, and market started moving up towards 11,300. Your margin requirement will increase unless and until you shift your put of 10,500 to maybe 11,100. So when you increase the premium collected on put side, or when you try to neutralize your delta, you are having a very good impact on your margin requirement also. Your margin, available margin increases. Although the amount is very little. So from 129, 116, that means 14,000 rupees. But imagine a situation wherein somebody is having, let us say, uh, 10 positions, 20 positions, 30 positions, that can have a big impact on your overall margin available for trading. Now let us see how can we reduce these margins. Most of the time this question is coming that okay, how can we reduce this margin? Can we reduce this margin further, and what kind of investment we need to do for reducing these margins. So for reducing these margins, let us see what we are to see. So I will show you. If you have another 3 likes, we are very short of 100, right? All of you go ahead and click on that like button. I've taken a small water break also, right? Okay, thanks. Now let us see what has happened now. See this 11,300 call, which was asking for 1,13,000 rupees. If I sell that 11,300 call and buy 11,700 call of, which is costing only 312 rupees. If I buy 11,700 call of 6th August, you see, this is the real trick. I am selling 11,300 call of 27th August. I am buying 11,700 call, which is just less than 5 rupees. 312 rupees is the cost. If I give that 312 rupees to the market, my margin requirement gets reduced drastically. From 1,13,000, it becomes only 41,000 or 40,000 rupees. So I save around 72,000 rupees. Are you getting it? I am just buying 11,700 call, which is costing 312 rupees, and my margin requirement gets drastically reduced. This is the big trick which earlier was not available, right? By far out of the money call for sold call, by far out of the money put for sold put. And you see, I have seen so many times in one of my accounts, it was that okay, the margin was almost becoming zero, available margin was becoming zero. What we did is we purchased some far out of the money weekly calls, which were very cheap, 4 rupees 50 paisa, something like that, and immediately lakhs of rupees were available for doing trading, right? See this 11,200 call. When we purchase 11,700, the margin required is 38,654, and 11,100 call. When you buy 11,700 call, I don't know why this phenomena is happening. That okay, the margin required is getting further lower. Maybe the amount of margin you have, amount of premium you have picked by selling 11,100 is more slightly. So that is why it is becoming more beneficial, right? If you're coming nearer to the market, and I don't know whether there is a calculation error in this. I should have loved it if it is 11,100 is 40,000, 11,300 is 36,000. Maybe I'll need to check it, and I will give it in the again I will confirm it in the comment section, right? So this trick is applicable to Nifty options, obviously, because Mr. Joshi, you do not have any weekly options in stocks, right? Logic behind that, Mr. Arun, is that now your position become a covered position, right? Once you have purchased a call, so the system understands that, okay, what is the maximum loss? Now 11,300 call, let us say you have sold, and 11,700 call you have purchased. What is the maximum possible loss? Maximum possible loss is 400 points minus whatever is the premium what you have collected. For 11,300, let us say you have collected 100 rupees premium. So your maximum loss is 300 rupees. So 300 rupees into 75 is hardly 22,000 rupees. So your maximum loss possible is 22,000 rupees. So exchange is blocking 41,000 rupees, right? And as soon as you remove your 11,700 call, the margin block will again touch 1,13,000. So that becomes very tricky whenever you want to sell something. Let us say you want to sell 11,300 call. First thing you must do is first buy 11,700 call and give the 312 rupees. I always say that, okay, let me pay some interest to the market to reduce my margin requirement. By paying 300 rupees, my margin requirement is getting reduced by 70,000 rupees, which is not a bad deal at all, right? Obviously, what happens after weekly expiry? This 11,700 is gone. You have to spend another 2, 3, 4 rupees on another call, Mr. Mayor, right? So yes, Mr. Ghosh, it's applicable to Bank Nifty also, and Nifty and Bank Nifty only. Yes, if we will do in call and put same things, further it will get reduced up to a range. Yes, it definitely get reduced, Mr. Deepak, right? Is there any criteria of buying a call first and then do the selling? There is no criteria. If you want to take the margin benefit, now suppose your account is having, let's say, only 1 lakh rupees and you want to sell 11,300 call. If you first sell 11,300 call, it will not allow. It will say, okay, your margin requirement is not fulfilled. Your account is short of funds. But instead of that, if you first buy 11,700 call, it will block 312 rupees. Your margin is still 1 lakh, and now you're able to sell 11,300. That's the best thing. Now I remember what happened in last week in one of my accounts, which is a small account. So what happened? There was some protection buying of 11,700 like that only. Let us take this example. Against five calls, these five protections were purchased, and the price was almost it was almost close to expiry. The price was less than 50 paisa, and we said, okay, let us close this position of buying, and let me, because we are coming into next week, let me buy next week's call, which is worth 3 to 4 rupees. So the mistake I did was that without doing anything to selling, obviously, I said, okay, let me first close this buy and I will buy next week, right? I closed this buying. As soon as I closed this buying, my account became negative. As soon as I closed this buying, my account became negative and it didn't allow me to buy anything even worth 2 rupees. Right? It didn't allow me even buying a call worth 2 rupees. So what we had to do, we have to close the selling also, then do first buying and then do closing. So my request is that, okay, if you are shifting from buying of this week, which has already gone waste, it's like an insurance, you can say, it has already gone waste. So first do the buying of next week and then remove this buying. Otherwise, what will happen? Your margin will immediately become short. And also the second point is, which is important, if you have done this and if your account is just educate in margin and the expiry happens, let's say on 6th of August, you have done this trade on 6th of August, expiry happens, the 11,700 becomes zero. If you do not buy protection, if you do not reduce the margin requirement, then obviously next day your account will be short in margin. You have to take care of these things if you're doing right? It also works on calendar spread. Yes, it works extremely well on calendar spread. Cost of saving margin may be much more than highest interest rate. You check that, Mr. Chaudhary, right? But you see, it gives you a lot of what I said. It gives you a lot of confidence that, okay, in 10 lakh rupees I'm able to do so many trades. So if something 11,700 is taking away, maybe you're saving something on 11,300 also, right? Don't see that, okay, only 11,700, 312 rupees will go. But your 11,300 also can reduce and it can give you a lot of money, right? So it becomes very difficult to calculate the interest part and all that. Ultimately, there is a system that, okay, otherwise in 10 lakh rupees, you're able to sell only not even 10 lots. Each lot will require 1,13,000 rupees, and otherwise you can sell even 20 lots. Then also there will be money, right? So that thing, somebody, you need to calculate that, okay, whether you are more keen on interest part or you are more keen on making some profits on the trade, right? Uh, by August, monthly expiry for rupees 5 each, 85 and other, my margin reduced by 1 lakh. That's good. Oh, that's a good information. He said I purchased monthly 5 rupees, 8,500 put and 12,800. Depends upon what is the other position. Mr. Modi says margin got reduced. That's excellent, right? Brokers do that. So good. Okay, thanks, Mr. Deepak ji for now. Let's see another case. Now, in this case, what we have done for 11,200 also we have purchased a call for 11,100. So margin requirement gets drastically reduced. Now, see this case. If I am having 11,300 call and 11,000 put, I am buying 11,700 call and I am buying 10,300 put, my margin requirement gets reduced to 49,000, which earlier was, if I show the previous screen, 11,300 and okay, it is not there. Roughly around 120,000, 1,20,000. So from 1,20,000, if I buy a call as well as a put, so I'm giving roughly around 500 rupees to the market. You can play with these things. You can try that, okay, what kind of difference it makes if I buy 10,200 and 11,800. You can always do. So I'm selling monthly options and I am buying weekly options. The margin requirement is getting drastically reduced. It is becoming less than 50%. Right? Problem with Zerodha that they don't allow you to buy far out of the money options. I think that is resolved or not. I really do not know. So that is you can say that's a local problem of Zerodha. That is not a universal problem, right? And similarly, if I see 11,100 call and 11,100 put, obviously the pair required less margin. But when I protected it by 11,7 and 10,3, it is only 46,000 rupees from somewhere on 1,60,000 rupees. So a good decent reduction in margins is happening even if you are uh, taking care of these positions by 4,545 rupees kind of. 225 rupees is just 3 rupees, right? If you just give 3 rupees, the kind of margin requirement reduces. So you can experiment, you can play with these things, right? But only thing is, I'm slightly surprised by this third thing which we have seen. Uh, what we have done in this case, 11,003 and 11,001, same situation, 11,3, 11,1, and instead of buying a weekly option, we purchased a same monthly call and put, and we get the margin output as 56,990. So maybe the premium received is getting low. Maybe you're paying more money for. I again couldn't find out the reason why this should happen, because if you're buying weekly, it's saying 49,000 only, and if you're saying monthly to monthly, it's charging me 56,990, right? There are 2 3 questions which we need to answer, that okay, how this is happening and how that works with futures also. So because of slight paucity of time, we are not able to calculate all those positions. But one point is very clear, that okay, I'm not saying you use it every time. You go with your trades. You see, it's better to have good trades rather than, you see, only doing margin management. You must think that okay, I need to reduce my margins, but if my margins are lying idle, I may not waste even 500 rupees, right? Why should I waste even 500 rupees when otherwise my account is having 70% cash? I should not do that. So go for your trades, and if you feel that okay, let us say I've sold 10 lots, maybe I'll buy 5 lots of far out of the money call or far out of the money put, and then reduce my overall liability, and overall in my account I will have 30 to 40% cash. So that gives you more confidence that okay, in case market makes a move here and there, that kind of cushion is always available in your account, right? uh, uh, what Mr. Ghosh is saying, on the day of expiry, for OTM calls and puts get auto scared off by system. I face it with ICICI Direct. So maybe what they're doing is, so auto scared out means, Mr. Ghosh, have they charged you brokerage for that? If that is the case, that's not very fair. And what time they get auto scared off, you need to check that. ICICI Direct, as far as margins is there, it's okay. Dr. Kadam says, I don't know, allows for what, for Zerodha or ICICI, I don't know. Zerodha still won't allow for out of the money positions in weekly options. Monthly, they allow most of the strike prices. That is, you see, basically because Zerodha is big and their independent OI for one broker should not increase certain limits. So that's why Zerodha that is facing that kind of a problem. I think I talked to one of the guys in Zerodha. They said they have some solution. You need to talk if you want to use these kind of things. I think get connected to Zerodha. They are doing certain. They are providing some solutions for these things. Weekly, they are not allowing good win probability, but for these restrictions, I'm again suggesting all of you, if you are trading with Zerodha, either you talk to them. I think they have some solutions for people who come to them, and if not, then you know what is the choice. The choice is maybe change the broker, right? Dr. Kadam saying Zerodha allows. Why? Because Zerodha has some system wherein for few customers it is allowing that. For masses, I have seen their margin calculator that okay, anything below 10,650 and 11,600 we are not allowing. That is right written. But they have now two kinds of system. For few customers they are allowing. For few customers they are not allowing. So if they are not allowing for you, they are allowing for Dr. Kadam, then definitely there is a problem. Go ahead and talk to them. As far as I know, they have done little bit of adjustment here and there. I think they have changed the clearing member or something like that they do, and ultimately they allow you to trade. Only thing is you need to contact those people, right? What Mr. Gopal is saying, as per new rules, should we wait for T plus 2 days to use the margin which we get by scaling the sold option? No. For sold option, for options, there is not. That is in case you are doing a cash selling. In case of cash selling, cash buying, those settlements take 2 days. Option settlements doesn't take 2 days; they are immediate. So there is no change in as far as settlement of options and your uh, money coming to your account. I think there is no change at all. I have not read any such news or any such instructions. That is Mr. Gopal Rao for cash. If you're selling a stock now and your broker is following T plus 2 settlement, then that money is available to you on third day. But if your broker is allowing early paying, is doing T plus 1 settlement, again that money will be available to you, although next day or maybe immediately also. They are working on that. As of now, I have also not received any communication, right? Uh, it is not fair to allow only few customers. So even a mother gives milk to a crying baby, right? So go ahead and talk to them. They have some systems as far as I know, right? Dr. Kadam is special. Definitely, Dr. Kadam is a special man. They are transfer their account to some other broker account, but one limitation, you cannot give shares, etc. in pledge. And so Mr. Modi is giving us some information. I don't know whether they are transferring your account to some other broker, what they are doing, but yes, I have seen people who are able to do all these trades on Zerodha, right? Uh, all the new margin rules are postponed till September. I really don't know. As far as this 20% war plus ELM, this was to be reported. This was not implemented, but certain things like pledging and some other things were to be implemented from first of all. So there are certain areas. So at least 30 days are there. August month is a complete month within which they need to do that, right? So Dr. Kadam is giving a solution. You write to support at Zerodha and they will allow you also to do all these options, right? Very few likes. I think I'll make a final appeal for liking the video. Okay, so tomorrow or day after tomorrow, we are planning some videos for all our members. It can be gold, diamond, or smart edge members. So if you're a gold member, you can participate in live chats, and we will be giving some videos now, maybe on Saturday or Sunday. And if you are a diamond member, you can connect to us on WhatsApp, and you can ask doubts on your trades, our view on your trades. And if you're a smart edge member, you can see some of our trades and their hedging and their adjustments, right? Want to join anything, you can join by clicking on this join button, or there is a link given in the description also. Most welcome for all of you who have already joined this August 8th and 9th workshop. We will be talking about basic mechanisms. We will be talking about Greeks, meaning and their usage. And we are creating some video which may be available by Sunday evening or Monday evening for exclusive members on Greeks also. And then strategies for volatile markets, strategies for long-term wealth creation, time spreads, and very interesting bull call. We have got these four strategies, including ratio spreads and toss wealth cycle will be there in the workshop. And happy to announce that our website is now healthy and running. So we were also in a little bit of stress from last 2 days, but now I think everything has been taken care by our IT people. So thanks to them also. So got a message that 20% margin should be maintained for both buy and see. What does it mean? That okay, if you want to sell, there must be, if you want to sell something worth 1 lakh rupees, there should be 20,000 rupees in your account. Only then you will be able to post that selling order, Mr. Arun. So that is the new thing. And let's say what happens, how that gets implemented. So with which account, with which broker you are, Arun, and you got message from which broker? Kindly confirm that, so that you see, all of us need to check our mails, because we may get some important mails today or tomorrow. Because if 1st August is the date, obviously 1st August is not a trading day, 2nd August is again a Sunday. Maybe all the brokers are working on Saturday and Sunday to take care of certain issues. So Mr. Arun has already got that mail that okay, you need to keep the 20% margin for selling also, which is by India Infoline. Okay. So Mr. Sharma says Upstocks has also sent me a mail. So all of us need to check your mail. Even I need to check my mail whether some mail is lying, which is confirming all those things, right? So let us see if all these things are implemented. We need to. It's like Corona, right? We need to adjust ourselves to live into these kind of environments. Whether there are certain illogical things, but yes, we have to bear these things, right? So don't worry about those things. If they are not that great, maybe I think brokers are also making some representations to remove this. This is absurd. That okay, 20% margin required for selling your delivery also. That's really, I'll say uh, I'll say cruel, yeah. That should not be required. So even Sher Khan has sent a message. So all the brokers are taking some actions, and they're sending you the mails. So take care of your mails so that you should not miss any important information. Thanks to all of you who have started joining us on Twitter, and all of you who have still not joined. Please go ahead, and we have given the handle in the description also. You can just go to Twitter handle and follow us on Twitter. We will be doing many interesting things on Twitter in coming days once we have a good number of participants. To join our workshops, you can contact us on these numbers. You can call us, you can send WhatsApp to us. You can also contact us on info@theoptionschool.in for any queries. It's a dumb idea from SEBI to ask extra margin for selling. Yeah, you see, sometimes we feel that okay, what the hell is this, right? These kind of rules. I have not heard of these kind of rules anywhere in the world. So what they're trying to do with this, I really don't know. That okay, you have shares with you, you are ready to give the delivery also. Why the hell you should have money? That's really something which is not very digestible, but you can't do anything, right? If it is there, you have to live with the system, right? If you, Mr. Gunjan is giving again some good input. If you ask broker to shift your delivery to exchange immediately, that's it. See, there's a point that okay, if the delivery is T plus 2, then you need this margin. And I don't know whether all the brokers will be able to do that T+1 settlement. They have their own backend issues, right? So if they're able to do T+1 settlement, anybody from Zerodha who has received this message, I would be, because Zerodha, Mr. Nitin Kamath has ensured that okay, they are with T+1 settlement, and there these things may not happen. So that's why I was asking which brokers. So Indian Flying, Upstock, Sharekhan, they have already done this, but I think in Zerodha they will take care of this. You may not require any extra margins for delivery. You need to see how other brokers catch up. They must do that, right? Yeah, it's, very logical, Mr. Sharma, but sometimes markets do all the illogical markets do illogical things, but then at least uh, the governing body should not do illogical things, right? Go ahead and like this video. Whenever you feel like liking, share this video to somebody whom you think it will be useful. Write your comments, questions, answers, feedback, and we will try to respond to everything as soon as possible. And if you have not subscribed to the channel, go ahead and subscribe to this channel. So India Infoline is giving of nothing from Zerodha. Indian loan giving options to price the stocks to get margin. We need to give the consent. So please do that consent thing, right? So maybe Indian Flying has finished their work today. Uh, Other brokers may be doing it on Saturday. So they have full, as far as that pledging thing is there, they have full month to do the transition. And as far as 20% margin required on selling, if the broker is using fast settlement, he may not require to do anything. But if the broker is doing slow settlement, obviously he will ask you to keep 20% in your account. Don't feel bad about that. You see, in any case, most of the time there will be some cash lying in your account. So actually the degree of problem is not that very high. It's not that okay, your account is zero and you're selling the stocks. No. Generally you will have some 50,000-60,000 rupees lying idle in your account. So it will take care of selling 2 lakh, 3 lakh worth of stocks. How many times we have sold stocks worth 2 lakh rupees in one shot? So practically, if I say, there is hardly any issue. But psychologically, yes, it is something which is not acceptable. But otherwise, if you see, most of the time, as a retail trader, how many stocks you are selling? You're not selling stocks worth more than 50,000-60,000 rupees. So even if you have 10,000 rupees, that will get blocked, and you'll be able to do the transaction. And once that transaction is done, all the money will come back, and then you can sell other stocks also, right? If demat account is with same broker, the broker will do to remain competitive. Hopefully, those things will come. Uh, that's why 20% margin is good. In the same way, 2 point short selling, perhaps, yeah, because it requires T+2 kind of a settlement, right? So thanks to all of you, and have a great weekend. Enjoy your weekend. And today we're lucky that okay, nothing bad happened to the markets. Markets are very simple, so that's really great. Most of your trades must have become green. So now don't worry about anything. Enjoy your 2 days, and again, see you all on Monday, same time, 9 p.m. Thanks for joining. Good night. Thank you.